Hello, I'm Stephen Ho, trader and founder of TheStopHunter. Now, gold is something finally about to give to get that price moving. Now, at the moment, the fundamentals are certainly helping the situation, but what's going on in the technicals? Could we be seeing or about to see a more bullish outlook, outbreak in the price? Well, in this week's report, I'm going to dig into those technicals, the charts, to see where it might be heading next. So let's get on with that analysis. So let's start with the weekly line chart. Now, what we're looking at here is probably a technical analyst's greatest dream. So much going on, so much to talk about. If we start from the left and work our way through to the right, we can see from 2017 through to sort of mid 2019, that area of consolidation, about $1,200 to say $1,350, and then we can see the price break out very strongly, and we can see that actually rose over 71% up to those highs in mid 2020, and since then it's consolidated in that sort of triangular patterns that we can see. There's two of them. The current one is speeding up with the narrowness of the price range there. You can see the green and red arrows pointing where they've hit, so there's a lot of consolidation going on there, and I've left on the yellow box there from previous videos to show where most of the price action has been occurring really since early 2020. Now, if we use the rules of technical analysis around flags, pennants, that sort of thing, we could take the flagpole from the breakout in 2019 up to almost those highs, and then what you would do is you then substitute that pole into the breakout of that triangle pattern, and that takes you up to over $2,400. And in terms of time wise, how long will it take there? That's mid 2023, so that's a longer term upside viewpoint if the technical analysis works out. And also, I'd just like to point out, using the Fibonacci's there, how well that has also worked out in this market. The 61.8% key Fibonacci line, you can see how many touches price action we've had around there. And then if you go down to the 38.2% line, again you can see Fibonacci working very well. And in terms of volume, you can see most of the price action has been in that lower 2017 2019 area, a lot higher activity, and really since then the volume's dropped off, and probably why things have slowed down, gone sideways for a while, more things like cryptocurrency have taken over and pushed gold more to the sidelines. The interest in gold has, like I say, petered out some, but looking at that pattern there could be a nice breakout to the upside, and if not, it's going to probably stay around in that range area, that yellow box between late 1600s to mid $1,800 area, but encouraging signs. Now, if you're in for some price reversal action, then using the line break chart could be useful. I use the 4-line break chart here, two different time frames, daily on the left, hourly on the right. The hourly give you quicker entry points. Now, again, I've left the data on from the last video I did mid-December to see how prices progress. We're still in that bullish reversal phase, and 1785, 1805 has gone. Next big number on the slower line break there is 1877, and go to the faster one, then I think you could be looking around the sort of 1826, 1830 area for a more immediate bullish entry. What's a daily Heikin-Ashi showing us? Well, it looks pretty sideways, doesn't it, from the start of 2021. Signals at the moment currently all bullish. Volatility picking up, about 3% over its longer term moving average, and volume still not doing that much. Heading on to the price action itself, well, nothing much to say really, other than it's all pretty neutral around that sort of early 1800 area. And onto the Renko chart using a $5 block size. All our signals at the bottom are bullish, and again I've left on the price there the yellow bands that I used in the mid-December video. Just extended that top one, just pointed out how the price is banging off that same area level, and again their Fibonacci points 23.6% and 38.2%, around 1760, 1790 dollars. But again you can see it a lot more clearly using the Renko charts, and the price, didn't want to go below that 38.2% line and keeps bouncing on upwards and stuck at the moment sort of in that range in the early $1800, looking to push on upwards and possible new buy signals created. Immediate upsides 1837, 1840 area, then 1870, then up to 1913. Downsides, if it breaks below that 38.2% line, then it's into the noise down to sort of 1760 zone before thinking about where it will go next. But overall, in the short term, looking a bit more bullish. So we're going to finish up with some sentiment technical analysis, and we can see down the bottom there seasonality. It's a bit choppy in January on the right hand side there, but it does pick on up all the way through to March time. So some bullish outlook there in terms of historical price. And up onto the commitment of traders data, red line large commercials, black line large speculators. Really, if I'm analysing that, it's pretty neutral at the moment. It has, the large speculators did pick up a little bit as price has picked up as we would want to see, but it's not that exciting. Neutral to weak bullish there at the moment. So it was hard to decide between a neutral weak bullish score today, but weak bulls just edged it due to the fact that in the top right hand corner seasonality comes a lot stronger, and we're still in that sort of 4-line break sort of bullish zone, and Heikin-Ashi chart was particularly neutral, and Renko more short term, bit more positivity there, a bit more bullishness. And if we head into the targets, not looking too bad to the upside if it can get going, break out of that triangle sort of pattern that we saw on the weekly line chart. 2 to 1 and 4 to 1 to the upside, and still not too bad to the downside, 1.27 and 1.88 to 1. But overall, like I say, it's just slightly weak bullish feel at the moment. Gold trading can be especially frustrating at times, and that's been very true of the last 6 months or so, but maybe now the pattern is starting to look a lot more clearer where it might be heading next. It's feeling a bit more bullish, but time will tell and we'll see how that plays out. But like I say, the signs are there, and we haven't really touched on the fundamentals, but with rising interest rates and economic potential problems out there across the globe, then gold might be the winner. Let me know in those comments below whether you agree or disagree with the analysis, or do you have your own opinion where you think gold might be heading to next. Love to hear from you, get that discussion going. Now if you like today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of content I will be producing. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.